What's good, YouTube? I'm back with another video, and in this video I'm going to be showing you guys how I trade liquidity grabs and just showing you the step process, like what I look for when trying to take a liquidity grab setup or when I see a liquidity grab setup. If you guys know Doyle Exchange, I take liquidity grab setups exactly the same way as him. I learned from him. So if you guys already know how to trade liquidity grabs like Doyle, you're going to see that you kind of understand everything in this video. But let's go over it. So the first setup here, I took the setup and I live recorded the setup. So did Doyle. So I'm going to put the two setups, so the first two setups on GJ and AU I took, and I've posted them on live recording. I'm going to put them up on the screen now. You guys can go watch them. But yeah, you can actually watch like how I traded it and stuff. But I'm just going to do breakdowns of them now. So on this one, on this GJ one, we have liquidity sitting right underneath here. The market needs to eventually come down and grab this liquidity, and then that's where we're going to be looking for a liquidity grab. So we mark out, well, the strategy marks out liquidity grabs like this. You try and get majority of the wicks inside the two lines. Then you wait for the candle to come and sweep the liquidity and reverse away from it. So this candle came down, grabbed the liquidity, and then pushed in the opposite direction. So we broke this low here, grabbing the liquidity, and we pushed up. So part of the strategy, you would get in at break of the candle, and you'd look for 1-to-1, and that is what you'd take. So that is pretty much just it. So you got 1-to-1 on this setup. There was a demand over here that I took. But you guys need to watch the live recording to understand that. Like, I took this demand as well, and yeah. But that is the first setup, and I'm going to go on to the next one now. So this is number 2. So right here, we mark up the lows where the liquidity is sitting underneath. And all we do is wait. So I like taking liquidity grab setups, or the best liquidity grab setups is where when the market comes and sweeps a swing high or swing low, you guys will see in examples after this. So this one, the market just came down, swept the liquidity, and we literally did not close. Like, you cannot, this candle cannot close underneath this the lowest wick. It has to close above it, just like the setup did. No candles closed in these lines, or it doesn't matter if it closes in the lines, but it can't close outside the lines, else the setup's not valid. And this one just came down, grabbed the liquidity, literally pushed all the way back up, and part of the strategy again, you'd get in at break of the candle, and you'd look for 1-to-1, and you'd just let your trade play out. Some setups do like going for, well, liquidity grab setups do like going for longer than 1-to-1. This setup had 4-hour confluence as well. There was a 4-hour demand. I'm going to mark it up. Here's a valid 4-hour demand, which is just going to give us extra confluence to take the liquidity grab, because there was no 5-minute demand. So I looked for something else to take on the 5 minutes, and a liquidity grab showed up, and that's literally what we took. I'm just going to delete the 4-hour box. And then you could have held this because they were in a 4-hour demand. Okay, no, it did not win. Well, only the liquidity grab won. The 4-hour demand doesn't look like a 1, but yeah. Now we're going to move on to the next setup. This is the next setup, number 3. And same thing like always. We mark up the lowest, well, the wicks from the swing low. Liquidity sitting underneath right here. And we wait for the market to come sweep it. There we go. The market. See this one? The market did, like where I drew the wicks, it did close below. Like this red candle and this green candle both closed below it. But it didn't close below the bottom of this wick here. So all you need to do then is just lower it just so it looks valid. Well, it is still valid, but as long as it doesn't close below this wick here. If this red candle closed below this wick here, I would have, this is invalid. I'm not going to take it. I'm not going to look at it. But it didn't do that. So we got in at break of the candle. And all you do is wait for your 1-to-1. You can take it higher if you want. This setup had 4-hour confluence as well. If we go to the 4-hour, we are in a 4-hour support, and the 4-hour also grabs liquidity. that is the 4-hour liquidity, well, the support. And then if we zoom in, this red wick here came down and grabbed all this liquidity, grabbing the liquidity of this low here and this low here. So did the green candle. So that just gave us extra confidence to take. You could have even taken this off the 4-hour, but that is, yeah, it happened. Well, it looks like it happened in like one candle. But if you go to the 4-hour, if you go to the 5 minutes, you literally could have held this because we had 4-hour confidence, and you could have held that. But I only take 5-minute setups, so that is what I would have looked for and would have taken on the 5-minute. Moving on to our next setup. Same thing like always. Let me tell you guys something. Liquidity grabs work the best when the market is consolidating because there's no trend. You don't know whether it's going to go up or down. So liquidity grabs work best when the 200 EMA is flat. In the next 2 examples, I'm going to show you the 200 EMA is literally flat and it throws so many liquidity grab setups. So here you can literally see the liquidity, the 200 EMA is flat in the middle, and all we do is mark up our, we draw our lines, mark up our liquidity grab setup, and all we do is wait for the market to come and break above these highs, but not close above the highs. There we go, and that's literally what we get. The market came, broke these 2 highs here, and then pushed all the way down, closing below the lines and this candle high here and this candle high here, making it valid. Then all you do is wait for break of the candle and mark up your 1-to-1. This setup also had 15-minute confluence. We go to the 15-minute. 15-minute did the exact same thing. You mark up the wicks of the candle with the 2 lines. Then you just see the 15-minute candle came, swept the liquidity as well, and pushed all the way down. You could have gone 15 minutes, break a candle, or 5-minute, but I only trade 5 minutes, so get in at break a candle. And this setup you could have held because we had 15-minute confluence and it dropped. Then let's move on to the next setup, the 4th one. So over here, this one is just following trend. I'm going to show you guys on this one quickly. This happened like a lot later in the day, or when I was looking. So same thing, you just mark up the wicks of the candle, make sure that the candle grabbing liquidity doesn't close below the wicks, just like this one. Came down, grabbed the liquidity with this wick here, and pushed right back up. And we bouncing off the 200 EMA on the setup. No candles closed below the 200 EMA, close above. Then all we do is get in on break of the candle and wait for our TP to get hit. Let the trade play out and TP gets hit. Okay, then I'm just going to go to New York session on this day. You guys can just see the market is consolidating. We have no proper trend. The 200 EMA is cutting right through the middle, and let's just break it down for you guys. We mark up our, actually let's hit the replay mode. Okay, wait, let's go over the setup here first. Okay, so all you do is mark up your wicks like that. We know liquidity sitting underneath here, right there. All you do is wait for the market to come and sweep it. If it closes below the candle, then it's invalid. If it closes above above the 2 lines or above this wick here, it's valid. Then you just look for break the candle and you get in and you wait for 1-to-1. Not all liquidity grab setups are going to win. You're going to come across some losers. Like I did take an AU liquidity grab, I think it was like 2 weeks ago, and it lost. I have a live trading video on that. It's like live, I think it was live trading in school video. You guys can go check that out. That AU liquidity grab lost. So same thing here. We just wait for it to grab the liquidity, get in that break a candle, mark out 1-to-1 and wait. Then another liquidity grab setup, or 3 happened today. You waited. So we got liquidity sitting up top here. You would have drawn it out like this. Bam, bam. Wait for the market. See, on this one, it looks like it almost closed above, but it didn't close above this top wick here. So all you could have done is put it above that wick there and just make sure it doesn't close above that wick, because if it closes above this top wick here, the setup's invalid. And then you just wait for it, grab the liquidity with these two wicks here, got in at break of the candle, and would have just marked out 1-to-1. Then another liquidity grab setup happened. Like, liquidity grab setups work the best when we are consolidating. So right here, we mark up our liquidity, which is right here. We know that there is people's stop losses sitting underneath here, and all we do is wait for the market to come and sweep it. And as you guys can see, we did close below it here. See, when you're marking up liquidity grabs, you want to try and get the most amount of wicks inside it, just part of the strategy. But this one closed below it, and all you needed to do, since it didn't close below this bottom wick here, all you could have done is just done that, lowered it, and then bam, setup is still valid. Doesn't matter really where the lines are, as long as the market doesn't close below this wick, this bottom wick here. And then all you do is get in at break of the candle and let 1-to-1 get hit, just like that. So liquidity grab setups work the best when it's consolidating. Okay, the last two setups now. This one is on UCAD. Okay, let's mark it up. So we mark up the liquidity right here. We mark up the wicks. Then we know that there is liquidity sitting above. We wait for the market to come and sweep it. Market came, swept it. We didn't close above the candles, and this candle just swept the liquidity, didn't close below the candles, above the candles. Wait for break of the candle, get in at break of the candle, and bam. On this setup, it did end up losing. It is going to happen sometimes, but this one you could have cut your L once you saw that the market broke above the wall. When this candle pushed above and broke this high, you could have cut your L in how many pips is that? You could have cut it from 6.7 pips to around 3.8 pips. So you need to be watching when liquidity grabs happen, because not all of them are going to win, and then it hits stop loss. Moving on to our last example now. So same thing like always, you mark up, bam, bam, marked up. We know that liquidity is sitting here, we're waiting for the market to come and sweep it. Okay, this setup, it came and swept the liquidity, but it closed above this wick, this top wick here. So even if we try to make this valid, it's not. We mark up the top of the wick like that, try and get most of the wicks in it, but you see that the market literally pushes up, closes above these wicks here, making it invalid, and then it literally wins. Then the setup wins. This is not a valid setup at all. I am not taking anything like this if it closes above the top wick here, because then it could keep pushing up, but this one didn't, and it actually won. But all we needed it to do was just close below this top wick here, and it didn't. So this is invalid. So yeah, this is just how I trade liquidity grabs. But yeah, make sure you guys keep grinding, keep getting to the next level, and make sure you hit that sub button. I'm gonna see you guys in the next video.